The core lending group of Dubai World has agreed to restructure $23.5 billion worth of debt. We partner now with the FT to bring you Lex on Bloomberg. You get a sneak peek at the Financial Times' flagship column a day early. Richard Stovin-Bradford joining us now live from London. So, Richard, were there any surprises? I mean, headline figure alone, it seems like putting a big albatross behind us.
Yeah, you're right. There were no big surprises. I suppose the best news of all was that there was no haircut for the banks. They're going to get all their principal back, not as they thought. As soon as possible, they're going to have to get it over 5 years and 8 years. But the fact there were no surprises compared with the March announcement, which gave the broad outline on this, is really a sign, if you like, of the growing maturity of Dubai after it sprung this ghastly debt standstill possibility on us last November. I think it's learned that it must no longer surprise markets.
I mean, because this was essentially the debt crisis that began, I'm not saying it's related to Europe, but began to show up in the markets as fears of just what happens when sovereign debt runs into problems. I mean, what are some of the details behind the restructuring? Are there any other shoes to drop, so to speak, Richard?
I think, yes, let's look at it. The banks are on the hook for $14.4 billion US, and the 7-bank steering committee that's been representing 90 more banks, in fact, has come up with a structure where there are two tranches. There's one of $4.4 billion where the banks will get their money back in 5 years' time. That gives them a 1% interest rate and no other bells and whistles, if you like. And then on the other $10 billion, which is mainly dollar lending, but quite a lot of UAE dirham lending, there are different packages, different options that the creditors can choose from, giving them payment-in-kind notes, which, if you like, give them some upside if the Dubai World can sell some of its properties. And there are also backstop shortfall guarantees if there's a risk of repayment. So banks can mix and match. But, Deirdre, the main problem here is that the rate of interest is well below the market rate. 1% is absolutely nothing. And there's a little bit of discord, too, amongst the creditors, because the Nakheel property arm of Dubai World is getting 10%, giving 10% out on its debt. So I think there are a few ruffled feathers along the way, but it's hard to imagine this. 6 months ago, we were expecting major haircuts on banks. I don't think anyone would have thought we'd get this far.
Richard, we thank you very much. Richard Stovin-Bradford joining us there from the FT in London.